So we are all aware that September 17th is a massive day for the market as we had the Federal Reserve make an update on monetary policy. But in this video, what I want to go ahead and highlight is the nuanced approach that you want to be aware of in the next coming weeks for the market, as there's a couple of different things at play that you absolutely want to kind of keep an eye on to. Now, I want to start off by just looking at the S&P 500, right? So currently, we're just a few points away from new all-time highs, right? So it's been a very bullish time. This is something that I've been sharing for those that are insiders, that structurally the market was going to continue going up higher. However, I want to share this chart over here because what we see is historical data of how the market reacted when we've seen the Federal Reserve cut interest rates with the market within 2% of all-time highs. And it's honestly looking pretty bullish. This is really good news because when we look at the next 3 months, there's a 77.3% chance that the market closes up higher. And then you look at the next 6 months and it's a 72.7% chance. So it's very bullish and very optimistic, and that's something that I think everyone is excited for because we all know that it's been very restrictive within monetary policy, and that makes it a challenge for a lot of companies. Think about Tesla. We talk about that often. That's a very interest rate sensitive company, but also think a lot about those smaller cap tech stocks, right, which need a less restrictive environment to actually expand its operations and grow, right? And so of course everyone knows that as long as the market is not collapsing and we get rates getting cut and slashed, well, that's good news. But I also want to talk about a little bit of the seasonality that we should kind of be aware of. Now, real quick plug for those that are interested, right now we have a massive sale that for just $2 for the first 3 months, you could cancel at any time. You can join as an insider in Push and Profit Research, where every single day the market's open, I share my trade ideas as well as my daily briefings, and I talk about what's going on in the market. For example, one of the recent trade ideas I shared was ticker symbol CLS, which since I shared it in the last couple of weeks is already up 24.59%. But I also talked about a hedge with gold, right? And this kind of leads into what we're going to talk about in today's video because we see gold is at new all-time highs, and I'll go ahead and touch on why I shared for those that are insiders, why I'm actually taking some profits off the table and rotating into gold. But we'll go ahead and touch on that in this video. But just a quick plug that it is just $2 to join. But going back to something that we have to be mindful of, right, is where we currently are with the market, right? We're at new all-time highs or just a few points away, but we also see that market breadth is weakening. Now, I often share this for those that are insiders, how you want to see market breadth pretty strong to see the market continue going upwards, right? Because that shows that there's strength behind the bull run, right? That this bull run has some legs. But interestingly enough, market breadth has been kind of trailing off. And within the last 7 trading sessions, we've actually seen the advance and decline line actually decline, right? Where we have more companies declining than advancing, right? And so that's something you want to pay attention to. So the market is not having this overall strength. It's really just the mega tech names like Tesla that's been pretty bullish, right? We've done a few videos on Tesla. By the way, if you're not subscribed to the channel, consider subscribing so you don't miss out on any future videos. But market breadth is weakening. And to really show what we're seeing with market breadth, I think this is a good chart, which is a relative rotation graph. And what we see here is XLK, which is a tech sector. It's in the improving quadrant, and now it's kind of moving towards the leading quadrant. And I actually made a post on X just a few weeks ago when XLK was right over here, the lagging quadrant. I was like, look, tech is on sale. You want to go ahead and buy into tech. And so now tech is starting to show strength, right? All those mega cap names. But we're starting to see a majority of the market now stray away from the leading quadrant into the weakening quadrant, and some even going into the lagging quadrant. And so this is what I was talking about in terms of market breadth. We're seeing just the big names in tech start to push up, as well as, by the way, communication stocks or communication service stocks are doing well. But right now the overall market's kind of trending down in terms of market breadth, right? A lot of the other sectors are weakening. And so that's something that you want to be mindful of. Now, something you also want to be mindful of, and this is in regards to gold. So for those that are insiders at Push and Profit Research, I shared how historically speaking, September is the worst month for the market since 1950. And I shared it on I shared a yearly chart. But right over here, we're actually looking at each individual day for September. And so far, September has been pretty strong. But here's something that you want to kind of just remember, and that's that the bad portion of September doesn't really kick off until after the 20th, right? So a lot of times we have September historically have a pretty strong beginning and then ultimately finish pretty bad, with September 30th being the worst, which is actually my birthday, right? So pretty much every single year for my birthday, the market is pretty horrible on September 30th. And so that's why, right now, if you're at all-time highs with a lot of the names that you're in, it's not a bad idea to just have some trailing stop losses, to just trim from those positions, not exit completely, but just take some profits off the table. This way, you could rotate into something that's a hedge, and there's often different types of hedges depending on what type of market we're in. Currently, right now, the hedge that I think that is really the hedge for 2025 September is gold, right? And so that's why gold is actually hitting new all-time highs, and that's where I've been hedging to, putting into gold and kind of taking some risk off the table. Now, does that mean that I'm exiting the positions I'm in? No, absolutely not. I'm just trying to take some of the profits, rotating it to gold, and of course, when these days that, and it's not guaranteed that these days are going to come, right? Because previous price action is not indicative of future performance, but historically speaking, we do see the end of September pretty bad, and so this is actually where the buying opportunity would be. And so, of course, you should always trade and invest in whatever you see value in. You should never copy whatever someone is saying on X.com or whatever someone says on YouTube or anyone, right? You should only do whatever you see value in. But for me personally, what I'm doing is just taking some risk off, putting it into gold, and waiting until we get a little bit of a sale for the market, and then rotating back out of gold and kind of buying the dips. And so, again, we saw historically 3 months out, 6 months out, after the Feds cut rates and the market is near all-time highs, it's pretty bullish. But we know that there's historically some volatility in September. And so what I want to do is kind of just manage the risk in September, wait for those sales, and then get right back into the market, because I think the bull market is still strong. We still have a lot of earnings from companies that don't show anything deteriorating. The only main concern currently is the job market, which I'm sure you guys have been seeing play out, where AI has been a large contributor to a lot of jobs, not necessarily doing mass layoffs, but just kind of trimming the fat that has been there since the pandemic. And so that's kind of what I wanted to highlight, right? And so real quick, we'll kind of just look at the VIX, right? VIX is ticking up, right? The volatility, which people call it the fear index. When we take a look at the S&P 500 from a quantitative kind of perspective, we see that it's near its kind of this resistance here when we're looking at the linear regression bands. And so we may see, not saying that the market can't continue going up higher. I mean, historically, that's what we see when we get these rate cuts, but we may start to consolidate a bit, maybe even dip a bit. And I think that those dips are honestly just going to be buying opportunities. But for me personally, I'm just rotating, hedging, and then waiting for those sales to take place. Now, again, you should only do whatever you see value in. I know I made in my last previous videos, we talked about Tesla, right? Which, by the way, Tesla is a freaking beast over here, right? It's at $420. We recently had Elon Musk make a lot of tweets. He actually purchased, a large portion into Tesla, and there's a lot of hype. And I also, this is just not to make this video all about Tesla, but being that we talk about Tesla very often on this channel, we actually, I think the forecast for the deliveries for the third quarter, is probably going to be pretty strong because of the tax credits running out in September, and so that's probably going to prop Tesla up from a fundamental perspective for the end of the year. And then, of course, we'll reevaluate Tesla, as we head into 2026. And of course, I'll keep those updates for those that are insiders at Push and Profit Research. I'll probably make some public videos on Tesla, as I often do. But ultimately, we could see Tesla, get close to its peak back when we had it running up in December of last year. Wow, look at that. It's just from December, close to December. But with that said, hopefully you guys got some value in today's video. Again, make sure to check out the links, because one of the links in the description of this video is a link to join for just $2 to the Push and Profit Insider Research Group. And again, you could cancel anytime. And before you guys go, make sure to check out this video right over here if you guys like the videos that I make. And I'll see you guys on that next video. Take care, guys.